the problem with that is that after 100 years, gold miners will have dug up a lot more gold. And so if I had 10% of the gold supply 100 years ago, I would have 1% of the gold supply 100 years later. And the second problem is maybe someone steals the gold from me because it's very physical. If you want to move $1 billion of gold, it's 30,000 pounds. It takes $5 million in 1,000 days and maybe a couple 747s. On the other hand, Bitcoin would allow you to move $1 billion of Bitcoin from New York to Tokyo in an hour for $5. So Bitcoin, in essence, is 1 million times faster, 1 million times cheaper, and not only, and it's harder because you can't make any more of it. It's fixed at 21 million. So 100 years from now, there'll still be the 21 million. 1,000 years from now, there'll be the 21 million. So for the first time in human history, we have created, in essence, I'll call it a bank in cyberspace run by incorruptible software that offers a simple, safe, affordable savings account for everybody on Earth that doesn't want to run their own hedge fund or can't run their own hedge fund. You can deposit $5 into Bitcoin, or you could deposit $5 billion into it. So imagine if I just created this bank in cyberspace and $21 million got deposited into it. There's 21 million coins. So the price of Bitcoin would be at about $1 a coin. When $21 billion got deposited into it, the price of Bitcoin goes up to $1,000 a coin. And as you deposit more money, the price of Bitcoin is, in essence, if you look at it, it's like the amount of money deposited in the bank in cyberspace divided by 21 million. It is literally a bank in cyberspace. Now, is it better than gold? Yeah, because it's harder and you can audit it every 10 minutes and you can take custody of it. You could put $1 billion of Bitcoin in your head. You can hold it in a hardware wallet. You can't haul $1 billion of gold through an airport. So you can take custody of your property. For the first time in human history, you could take custody of $1 billion or $10 billion worth of property and hold it in your hand or in your head. There's no other property. So it is the most powerful form of property. But it's also better for another reason. It's also programmable. So I can write a computer program that'll take that $1 billion and slice it up into 1,000 pieces, loan it out for 4 hours, fetch it back. I can cryptographically prove that I have it in a split second. So this is money I can hold in my head. I can move at the speed of light. I can put on a computer server, and 1 million computers can trade with each other. And so people that are enthusiastic about Bitcoin, they might like it because it's a better gold than gold and it's a store of value. But you might also like it because it's the basis of the 21st century fintech economy. You can build a better banking system and a better financial system on a digital asset like Bitcoin because it is 1 million times faster, smarter, stronger than the alternative. And that's the exciting thing right now in the world.
And a lot of those transactions that you mentioned would not require the traditional intermediaries. Obviously, there must be software. There must be people who write the software. There must be companies, but these are not the same sort of structures as we have right now involved in, transferring money across borders, which as a small company, we have a lot of problems with.
Yeah, and the real genius of Bitcoin is it's a decentralized peer-to-peer network, which means that one person in San Francisco can transfer to another entity anywhere else on Earth, and you don't have to go through a set of intermediaries. And as you know, if you have 3, 4, 5 intermediaries, each one layers on a 2-day delay or maybe a 2. If you wanted to do trading with 10,000 counterparties, you might have to go through a 2 or 3 month process in order to figure out each of them to be able to trust them. And so
correct.
The impedance and the friction in finance is 1,000 to 1 million times higher.
I think that one of the things, at least people that I speak with, it's the volatility. Is lower vol really critical in the adoption process, or are we just going to have to live with this vol because it's new, people don't understand it, the technology?
I think the volatility is falling consistently.
Mm-hmm.
I mean, it used to be in the first decade, the market was dominated by individual leverage traders looking to make a quick buck.
Right.
And then you had these parabolic runs that goes up by a factor of 10 and it crashes by 80%.
Mm-hmm.
But I think that changed after March of 2020. And then the institutional money started to come in and they crowded out all of these early, leverage traders. And in the newer market, the institutional buyers are buying in an allocation in lieu of gold. And your use case is, I'm just going to buy 100 million or a billion of it, and I'm going to hold it for a decade. And I'm not buying it with leverage, and I'm not buying it so much to flip it. Like they have a different time horizon, and if you look at the trading since March, it was more like it runs up 25% or it runs up 40 or 50%, it comes down 25%, and it runs up 50%, it comes in 20%. And so the kind of volatility started looking like more common high growth big tech stock or something. And if you look at the volatility today and you compare the volatility of equities versus the volatility of sovereign debt versus the volatility of Bitcoin, they don't look that different, really. I mean, the other day, the 30-year treasury swaps, they jerked like 11, they were down. The yield on a 30-year treasury was off 6% in the day, or 5.5%. And it was the most volatile thing on my screen.
Right.
And so, I think that, first of all, if the asset's going to go up 198% a year on average for a decade, and that's the Bitcoin performance for the last 10 years, then incurring a bit of volatility to get 200% a year tax-free interest is a pretty good idea, because your alternative was gold, which is up 1.8% a year for a decade, or S&P, which is up 11% per year for a decade, or big tech via NASDAQ, which is up 16.7% a year for a decade, or long bonds like TLT, which is up 4.5% a year for a decade. So it's not even close. It's basically 20x better than equity and 100x better than gold. And volatility is a small price to pay. It turns out that the Sharpe ratio is better than any of those asset classes. So if you look at risk-adjusted returns, Bitcoin has by far the best risk-adjusted return in addition to the best risk returns.
Right. Okay.
And the story is the volatility is just going to continually decrease as the asset class gets bigger, as you would expect. Bitcoin's 922 billion. And gold's 10 trillion, and S&P's 32 trillion, and NASDAQ 17 trillion. So it doesn't take a rocket scientist to figure out that as the amount of monetary energy sitting in that network increases, the volatility will decrease.